We actually think we have some more room to run. One of that is just based on the fundamentals. We have things looking really well here. Leading economic indicators have turned up lately. You've got ISM manufacturing higher, housing numbers have been good, labor and wages is good, and consumer obviously being a foundation for our economy. We saw LVMH report this morning with 15% growth. So the consumer is there to help push this market forward. We see PEs at about 16.6, 16.7 right now. So we think there's some room to go there. Not that we're not going to have pullbacks. We will have some pullbacks, so you have to be opportunistic in the market, but we see it going higher.
Well, okay, let's talk about that PE ratio because the denominator, the E, that is earnings. Earnings season is nearly upon us. If the numbers come in big, then that will reduce that PE valuation. But if they don't, it will elevate that here. How are you expecting earnings to come in for the first quarter, Victoria?
Yeah, if you look at earnings expectations, they're actually down about 2.5% right now for the first quarter. I think people are underestimating what we're going to see. We actually think we'll have some positive surprise, and you'll see that City Surprise Index move higher. It's been negative for quite a while. We can see that move higher. That's going to give some tailwinds to the economy and let the markets continue to move up. We think that'll push yields higher on the Treasury yields as well. So it'll give us a little momentum going forward. Guidance is going to be key for earnings, as it always is, but when we kick off with JP Morgan, I think we're going to be pleasantly surprised.
If we're not, then what? If earnings start to come in a little bit weak, maybe guidance a little bit soft, then what happens?
I don't think we're going to have a huge downturn, but I wouldn't be surprised if we had a pullback. I think people have been expecting things not to be great from the first quarter. Obviously, we had the shutdown that happened. We had bad weather in February, so people were expecting numbers not to be great. But if they're truly negative, if they're really poor, then maybe we'll have a slight pullback. You could use as an opportunity to add to your portfolio. We were looking at some new names actually just recently. McDonald's is one of those names, kind of adding to some of our value sector.
Why McDonald's?
You know, McDonald's is just one of those companies that if we think the economy is going to continue to do well, if we think the consumer is doing well, that's a place that's going to benefit. We have a multi-factor model in our large cap product, and it scores really well on that. And again, we think that there's less downside potential for some of the value names versus the growth names in the rest of this year, and that fits nicely into that space.
Anything else you like recently, Victoria?
Estee Lauder is a name that we've added as well, again, for some of the same reasons that we added McDonald's. But we're really looking for opportunities with the different products that we have for our clients. We have a focus on income. So an option strategy is something we're looking at. We've put Adobe in that product just because there's a lot of options, volatility going on there, and that's good for us. So looking for opportunities that maybe you wouldn't normally do, but with volatility in the market, some of the U.S.-China trade talks going, the Brexit talks going, you have some maybe opportunities you wouldn't have otherwise.